Hey, what is loan to value and why does it play an important role when you're buying a car? Next here on Car Gab. Hey everyone, everybody's going out there and they want to buy a really nice car. They want to buy, or maybe you just want to buy a mediocre car. You just want, maybe a cheaper car so you have a way low payment and everything. Everybody's got these ideas of how they want to do things when they go to buy a car, and then when you get to the dealership, it's a different story than when you get there than what you thought it would be. And that's a lot of the reasons because of that is because of loan to value. Like the reason why, the banks want to loan you money on probably a more expensive car than a cheaper car. And the reason being is because that the car will last the term of the loan. And that's part of the reasons why. And one of the things is that, when you look at loan to value, you're looking at, like I said, the durability of the car, the lastability of the car, everything, that the bank will look at all these things, not only just your credit, and I do have a good video on AutoGab that you can watch about building your credit and the best way to build your credit. So, but anyways, that's another story. But loan to value, it's important. When you were financing a car, you want to do loan to value. Sometimes people go out there and they think, I want to get this $9,000 or $10,000 car, and I'll have a low payment or something like that, or put a good down payment and have a low payment, or however they want to do it. And then they get there and the bank won't give them a loan for that car because the car has too many miles or something, and that plays a part. You're going out to buy a $9,000 or $10,000 vehicle that maybe a 2012 or a 2015 or something, and say it has 160,000 miles, and the bank just says no, and there's a reason for that. They do that because the loan to value, and the loan to value, a lot of times it's better for you in the long run to get a more expensive car, actually a better valued car for your loan, so that the bank will say this will last the term of the loan, and it will be a better car for you in the long run, because you don't want to buy a car, a $9,000 or $10,000 car, and it break down in 4 or 5 months, and then there you're stuck with having to fix this car that you're actually still making a payment on. So there's a reason why the banks do this. They do this to help you so that you get what you need. Not only you think you have an idea, I want this cheaper car, I want to pay less for a car. Everybody wants to pay less for a car, of course, when you go out and buying a car, a lot of times, especially when you're doing a loan, you want to pay less for a car. But the bank, the dealerships are at the mercy of the bank most of the time. So the bank says, I want them to have a car that is a really, really good car that's going to last the loan. So maybe you're better off looking at, the type of car and a good down payment, and looking at, all these different things. There's very many different aspects when you go out to finance a car, and loan to value is one of them. I have an article right next to me on this website. If you're on the website, or if you're below me on social media, or if you're on YouTube or whatever, that gives you really good insight about loan to value, what it means, and how it surrounds when you financing a car. So check it out, read it, and do your research about loan to value and what it is exactly that you need in the car that you're getting for your life. And this is Brandon. Y'all have a great day.